Hi everyone, I'm Peishi and I'm going to introduce the company background of Maybank. Maybank was incorporated on the 31st of May 1960 in Kuala Lumpur, Malaysia. Within the very same year, the bank opened its first overseas branch in Brunei, showing its ambition of regional expansion right from the very beginning. In 1962, just 2 years after its founding, Maybank was listed on the Kuala Lumpur Stock Exchange and making it one of the earliest financial institutions to go public in Malaysia. Today, Maybank stands as the largest financial service group in Malaysia, with approximately 42,000 employees and operations across all 10 Asian member countries, as well as the key global financial centers including London, New York, Hong Kong, and Dubai. At the heart of everything Maybank does it is mission, and that mission is humanizing financial service. This means making banking simple, accessible, and meaningful for everyone, even from individual and family to large corporation and government. Now let's look at Maybank history. In 1960, Maybank was founded and opened its first overseas branch in Brunei in the same year. In 1962, it was listed on the Kuala Lumpur Stock Exchange. Moving forward, in 1992, Maybank became the first bank in Malaysia to launch a phone banking service, showing its early commitment to innovation and customer convenience. Then, in the year 2000, Maybank launched maybank2u.com, and it making it the first bank in Malaysia to offer internet banking. This was a landmark moment that positioned Maybank as a digital pioneer in the Malaysian banking sector. In 2008, Maybank established Maybank Islamic Berhad as a dedicated Islamic banking subsidiary. Today, Maybank Islamic is the largest Islamic bank by assets in the entire Asian region. In 2019, Maybank launched its MAE e-wallet, a fully digital banking app that allows users to transfer money, pay bills, and manage finances entirely from their smartphones. And the most recently in 2024, Maybank introduced the Money Lock feature, a security tool that protects customers from unauthorized digital transfer. In the same year, Maybank also surpassed 150 billion in sustainable financing, and it existing its own target ahead of schedule. Next, we go to the Maybank company sector. Maybank operates in the banking and financial service sector, but what makes it truly powerful is the breadth of its business divisions. First, conventional banking. This is Maybank cross-border business. It covers the full range of personal and corporate banking service, which is saving accounts, fixed deposit, personal loans, home mortgage, vehicle financing, credit cards, and also corporate lending. It serves individuals, SMEs, large corporations, and government entities. Next, Islamic banking. Through this subsidiary, Maybank Islamic Berhad, Maybank operates as the largest Islamic bank by assets in Asia, holding a 29.9% market share of Islamic banking assets in Malaysia. All products are Sharia compliant, serving both Muslim and non-Muslim customers. And the third one is insurance and takaful. Under its Etika subsidiary, Maybank offers life insurance, general insurance, medical coverage, and takaful, which is the Islamic equivalent of insurance. Etika is one of Malaysia's most recognized insurance brands. And the next is investment banking. This division provides capital market service, stockbroking, asset management, and private banking for high net worth individuals, positioning Maybank as a full service financial institution. And the last but not least, digital banking. Maybank is a pioneer of digital banking in Malaysia. Its Maybank to You platform, the MAE e-wallet app, and also the Maybank QR Pay together form a comprehensive digital ecosystem that continues to grow rapidly as more customers shift to mobile first banking.
Assalamualaikum and hi everyone. My name is Muhammad Haqim WAHAB, and today I'll be presenting about liquidity ratio Maybank on the financial year 2023 to 2024. So, what is liquidity ratio? Liquidity ratio are financial measurement used to test the ability of a company to pay its short-term obligations and debt as they become due. So in simple terms, this ratio helps us determine whether a company can use its current or liquid assets to cover its short-term liabilities. A liquid asset refers to an asset that can be sold quickly to obtain cash at a fair market value. So for example, if company A needs to pay its debt quickly, it can liquidate its asset to generate cash. A ratio above 1.0 indicates that the company has a good financial health and can pay back all its debt. So on the other hand, a ratio below 1.0 may indicate that the company is facing financial difficulties in paying back its liabilities. So let's take a look at the calculation on liquidity ratio. So the first one is current ratio. So in 2023, the current ratio is 7.65 times, while in 2024 it's 7.93 times. So for quick ratio in 2023 it's 7.65 times, and in 2024 it's 7.93 times. So the key findings that we can learn from here is the current ratio has improved from 7.65 times in 2023 to 7.93 times in 2024, while the quick ratio also improved from 7.65 times to 7.93 times during the same period. So third, Maybank can cover its short-term obligations 7.93 times over in 2024. So fourth, both ratios are well above the minimum threshold of 1.0, which indicates excellent liquidity. And finally, Maybank maintains a strong, stable, and improving liquidity position. Now, I will present the analysis of Maybank's liquidity ratios for 2023 and 2024. So first, let's take a look at the current ratio. So the current ratio measures a company's ability to pay its short-term obligation using all of its current assets. A ratio above 1.0 indicates that the company has good financial health and is able to meet its short-term obligations. The formula for current ratio is current asset divided by current liabilities. So for Maybank, the current ratio improved from 7.65 times in 2023 to 7.93 times in 2024. So this is a positive trend. So to put this into perspective, for every one ringgit of current liabilities, Maybank now has 7.93 ringgit of current assets. If the bank had to pay all of its short-term debts immediately, it could do so over 7.93 times. So the improvement was driven by current assets growing faster than current liabilities. Specifically, current assets grew by 4.7%, while the current liabilities grew by only 1.1%. So this means the bank's assets are increasing at a much faster rate than its debt, which is a very positive sign. So this positive trend reflects effective liquidity management by the bank. Management has done a good job of ensuring that the bank maintains a strong buffer of liquid assets to handle any unexpected financial needs. So the next one is quick ratio. So quick ratio is a more conservative measure of liquidity. It excludes inventory from current assets because inventory may take time to sell. So the formula is current asset minus inventory divided by current liabilities. Since Maybank is a financial institution, it does not hold significant inventory. So therefore, the quick ratio equals the current ratio. For Maybank, the quick ratio also improved from 7.65 times in 2023 to 7.93 times in 2024. So this confirms that even when using only the most liquid assets, the bank can still cover its liability nearly 8 times over. This is significant because it means Maybank does not need to rely on selling any assets to meet its obligation. The bank has more than enough cash, short-term investment, and receivables to cover all its short-term debts. This confirms that Maybank has excellent immediate liquidity and is well positioned to handle any unexpected cash demands or financial stress. So in conclusion, both the current ratio and quick ratio for Maybank improved from 2023 to 2024. So the bank current ratio increased from 7.65 to 7.93, and the quick ratio has followed the same positive trend. So this indicates that Maybank maintains a strong, stable, and improved liquidity position. The bank has more than sufficient liquid assets to cover its short-term obligation and is well prepared to handle any unexpected cash demands or financial stress. So this is a positive sign for investors and stakeholders as it reflects effective liquidity management and financial stability. That is all for me. Thank you.
Now I will present Maybank's efficiency ratios from 2024 compared to 2023. The first ratio is the fixed assets turnover ratio in 2024. The ratio increased to 30.20 times compared to 28.37 times in 2023, which is an increase of 6.4%. It means that Maybank generate more revenue from its fixed assets, showing better utilizations of its fixed assets. Next is total assets to turnover ratio. This ratio increased slightly from 0.062 times in 2023 to 0.064 times in 2024. Although the increase is small, it indicates that Maybank use its total assets more effectively to generate revenue. The key point is that both efficiency ratios improve in 2024. This shows that Maybank manage its assets more effectively, re- resulting resulting in higher revenue and better overall operational efficiency. That's all for the effectively ratio. Thank you. Now I will present Maybank's efficiency ratios from 2024 compared to 2023. The first ratio is the fixed assets turnover ratio in 2024. The ratio increased to 30.20 times compared to 28.37 times in 2023, which is an increase of 6.4%. It means that Maybank generate more revenue from its fixed assets, showing better utilizations of its fixed assets. Next is total assets to turnover ratio. This ratio increased slightly from 0.062 times in 2023 to 0.064 times in 2024. Although the increase is small, it indicates that Maybank use its total assets more effectively to generate revenue. The key point is that both efficiency ratios improve in 2024. This shows that Maybank manage its assets more effectively, resulting resulting in higher revenue and better overall operational efficiency. That's all for the effectively ratio. Thank you.
Good day everyone. My name is Felice and I will present about debt ratio analysis for Maybank for the financial years 2023 and 2024. The debt ratio measures the proportion of a company assets that are financed by liabilities. It is calculated using the formula of total liabilities divided by total assets. Based on our calculations, the debt ratio of Maybank was 90.5% in 2023 and increased slightly to 90.9% in 2024. This means around 91% of Maybank's assets were financed by liabilities, while the remaining assets were financed by shareholders' equity. Although the debt ratio is relatively high, this is normal for banks. Banking institutions rely heavily on customer deposits, which are recorded as liabilities in the financial statements. These deposits are then used to provide loans and other financial services, making a high debt ratio a common characteristic of the banking industry. The slight increase from 2023 to 2024 was mainly due to the growth in to- both total assets and total liabilities as Maybank expanded its operations. Since the increase was only about zero point 0.4 percentage points, it suggests that the bank maintained a stable capital structure and managed its financial obligations effectively. So, in conclusion, Maybank debt ratio indicates a healthy and stable financial position for a commercial bank, supporting its continued growth while maintaining a good financial management. That's all from me. Thank you.
Good morning, everyone. Today, I would like to present Maybank's return on equity, also known as ROE. ROE measures how effectively Maybank uses shareholders' equity to generate profit. It is calculated by dividing net profit by average shareholders' equity and multiplying by 100%. Based on the table, Maybank's ROE increased from 10.8% in 2023 to 11.1% in 2024. This increase shows that Maybank improved its ability to generate returns from shareholders' investments. A higher ROE indicates stronger profitability and more effective management performance. Next, I will explain the analysis and interpretation of Maybank's ROE performance. Based on the analysis, Maybank's ROE increased by 0.3 percentage points in 2024. This improvement was mainly supported by higher net profit, growth in loans and financing, strong performance in community financial services, global banking, and Islamic banking. Besides that, better asset quality, increased fee-based income, and effective cost management also contributed to this positive performance. In terms of interpretation, Maybank generated approximately Rm 11 ringgit 10 cent in profit for every Rm 100 invested by shareholders. An ROE above 10% shows strong financial performance and reflects efficient use of shareholders. In conclusion, Maybank maintained a strong and stable ROE, showing good management efficiency, sustainable profitability, and increased investor confidence. Thank you.
Hi, hello. My name is Jaziel. Today I'm going to present about the operating profit margin analysis. Okay, we can see the table given year 2023. Okay, the operating profit is 12.53 billion and operating income is 27.36 billion. And the operating profit margin is 48.80 per percentage. Okay, we going 2024. Okay, the operating profit is 13.7 billion and operating income is 29.57 billion, and the operating profit margin is 46.30 percentage. Okay, the operating profit margin increased from 45.8 percentage on 2023 to 46.3 percentage on 2024. Okay, the indicates improved operating efficiency. Higher operating income and effective cost management contribute to the increase, and the higher margin reflects stronger profitability and sustainable growth. Okay, now we're going to see analysis. So we can see the increase about 0.5 percentage, which is from 45.8 percentage to 46.3 percentage. Okay, it indicates a better op- operational efficiency. So the higher operating income and profit reflects strong business performance, and aggressive cost management and digital initiative improve uh, prof- profitability. Okay, then the more operation profit generated from every RMI of opportunity incomes. Okay, the conclusion is Maybank achieved a slight improvement in operating profit margin in 2024, demonstrating a stronger profitability and efficient cost management which supports sensible future growth. Thank you very much.
Hi everyone, good day. Today, today I will present my opinion on whether I will invest in my bank. My answer is yes. I will invest in my bank because it is one of the strongest and most trusted bank in Malaysia. The company has built a good reputation over many years and operate in several ASEAN countries. They make Maybank a stable and reliable company for long-term investment. Slide 2. Strong financial performance. One of the main reasons I will invest in Maybank is strong financial performance. The company consistently in good profit and maintain a healthy financial position. This shows that Maybank is well managed as as and has the ability to continue growing even during difficult economic conditions. As an investor, I believe financial stability is very important. Slide, slide 3. Dividend and digital banking. And another reason is that Maybank pay regular dividend its shareholders. This allow investors to receive income while waiting for the value for their investment to increase. In addition, Maybank continue to improve its digital banking service to MAE and Maybank to you. This service making is and more convenience for customer and help the bank stay competitive. Slide 4. Business stability and constriction. Finally, banking service and always net in individuals and business. They given Maybank a strong customer base and good opportunities for future growth. Or others every investment as some risks. I believe Maybank has strong management, stable financial performance and trusted brand. In conclusion, I will invest in Maybank because its financial strong profit, pay consistent dividend and continuous growth through digital innovation. Thank you.